Hey everybody, Brando here. We're going to go over one of my favorite coins, Jupiter. Jupiter is on the Solana ecosystem. We've talked about it before, but I'm going to tell you and go into why I think it's going to hit five. Yes, $5 per coin by the end of this bull cycle. Hint, hint, it's only like at one right now. So beautiful 5x return coming and awesome, awesome technology and applications that you can use right now. Let's go and check it out.
Jupiter is the swap aggregator for Solana. It has become the main swap on Solana. Raydium is another main swap that offers even more discrete DeFi coins, but honestly, it has less liquidity and it does not have all the bells and whistles that Jupiter has. So if you are looking for kind of an all-in-one Jupiter, if you're looking for like those meme coins that came out yesterday, that it's like, poop.com, then maybe Raydium's the one to go. But honestly, if you want to get into more respectable meme coins and just be on a platform that would be a little bit more trustworthy and has more options, Jupiter is the way to go. So again, if you look at my screen here, you got your simple swap. We've been over this exact swap before, and it's the same thing as all the others. However, there's other things you can do with Jupiter, which makes it so fascinating. This is the only coin swap really on Solana, and they are trying to integrate Jupiter as like Solana's main ecosystem coin. And there's a lot of bells and whistles that go with this. So you can set limit orders. So you could actually set limit orders on swaps, which is not a common thing to see, which is pretty cool. You can do dollar cost averaging here, and you can bridge assets over from Solana to other ecosystems and bring it. So this one can't change networks. The other ones you could change from BNB to Avalanche to Ethereum, as you saw. You can't change networks on Jupiter yet. It is strictly Solana, but you can bridge assets from other blockchains onto here. So that's the makeup that they do here. And there is a small fee for bridging, but it's not that bad. It's much better than MetaMask's bridge. We've been over this as well a few months ago, that you can bridge tokens on MetaMask, but it's pretty expensive. This way on Jupiter is much cheaper and more effective. Okay, and then there's also perpetual swaps, which we're actually going to start more for fun than anything, but we're going to start trading on here, seeing how effective and good they are. But you can trade Solana, Ethereum, and Bitcoin perpetual swaps, and you can do all the way up to 100x leverage. All right. DeFi being responsible, as always. I love it. But your liquidation price will come up here, and you can play around. And what this will allow you to do is actually hedge Solana, which on the traditional markets, you don't have an ability to hedge Solana. For our firm, we do hedge Bitcoin and Ethereum, officially speaking, on with our futures commission merchant at StoneX, and we hedge our client positions in the spot market using those official contracts, those registered contracts. This is not obviously registered contracts, but you do get the ability to hedge Solana here, and on a something that's not Binance, that's excluded, or KuCoin, which is excluded from U.S. usage. I'll be honest, in the long run, this kind of platform could be expelled from the U.S. and the SEC will probably jump after these guys, maybe in a few months, if this swap aggregator continues to take off, because this is the kind of thing that the SEC does love to chase after. They shouldn't. We should have the ability to trade this whenever we want and however we want. But again, the SEC, the government, they might come after this. So take this with a grain of salt. Especially if you're a serious trader or whatever, stay with the official sites like we do. But it is fun to play around. Maybe they'll have Jupiter itself as a perpetual swap and you can hedge the token. The Jupiter coin, by the way, very much like Uniswap, is a governance token. So the whole point is to vote not only in its own DAO, but there are many different DAOs within the Jupiter ecosystem that you can join, and you can use Jupiter as a neutral governance token. Okay. And we have LFG Introductions, otherwise known as Let's Fucking Go. And this is their launch pad, kind of like Binance's lab where they had blockchain startups and they threw capital at them and they gave them a platform to build. This is Jupiter's version of that. And they even have something close to a GitHub here where you can really dig into what all these projects are and initial proposals for things that they want to do in the governance protocol. Okay. What you can do with Jupiter. So this is a welcome to Solana. Solana is a high performance blockchain. Jupiter is integrated deeply with that. These are all the wallets that you can do with Solana. I use Solflare when using Solana. I feel it's great. Solflare does work through the backdoor is MetaMask. So even though you're not going to be pulling up the MetaMask like right here, and you're not going to be trading off this, the backdoor is your MetaMask account, and it will ask you to give signage permissions. So like whenever I transact from coin to coin, it's going to ask me, do you sign and approve of this? And I do have to click yes through MetaMask. So Solflare is the UI, but the backdoor is MetaMask, okay? And this is bridging. We just went over that. This is swapping. And these are all the dApps. So check this out. These are all the dApps that are currently on Jupiter. Jupiter is very new, guys. Jupiter platform itself is extremely new. It came around like, I'd say late fall, and the actual Jupiter coin was only released in January. We actually went over this on this channel when Jupiter was initially released. It's gone from 50 cents. It went all the way to $1.50, and it's now back down to $1. Still a very strong buy. Just the SEC might come after these guys too, but until they do, this is a great substitute for Uniswap token. Here's all the dApps that you can play around in with Jupiter. You got NFTs, you got DeFi. So DeFi means like it's just deep into the network. So Wormhole is a bridging tool. Magic Eden is an NFT marketplace. This is also an NFT marketplace. Meteora is a yielding liquidity pool marketplace. These are for payments. Okay, that's kind of cool. MarginFi is at the crosshairs of a big thing going on right now, guys. MarginFi, one of the co-founders of Solana, he's running MarginFi, and we're going to cover this and go deeper into it in a whole separate video. But MarginFi is not getting their yield farming tokens as quickly as they were promised because the Solana network apparently is underperforming. So a lawsuit's coming into case for a few $100 million. And this could be a potential problem. As bullish as I'm trying to be on Solana, and it has the momentum of the community behind it, there are some serious red flags going on, as we're alluding to. So just be aware and be careful of that. And again, with all these problems, this is why I really like Avalanche, and this is why I really like Trader Joe. But we'll get back to that. So you got all these different dApps, which are pretty cool. I'm interested in the payments because I don't understand how they're going to try to do these payments. I'm really curious. Sell more with crypto. We help thousands of merchants and creditors increase online sales with single-step crypto payments. Okay. 98% transaction rate? Huh. Look at this. That's really cool. All right. So they're trying to do payments as quickly as possible from a POS and maybe even small business standpoint. That's very cool. We're going to have to create a whole separate video on this in the future. I'll write that down for myself. Payments on Jupiter. See, this is the thing, folks. You dive into crypto, you think you're answering a question, and the next thing you know, you end up with more questions than you had answers. It's kind of like science. All right, we're going to do a whole video on that. But here's something else I found that's really cool on my own. There's a lot of games involved, and there was a sci-fi game out, an RPG where you have to buy space fleets, and they're an actual crypto. They're an actual dollar coins. So let's go to these big ships here, and you can buy this one for $645. And there's all these different marketplaces you can go into. If you're big in gaming, if you're big in Discord and all this kind of fun stuff, this is definitely a place you should go into. And this is unique. I have not seen anything this built out in Uniswap or PancakeSwap or Farmer Joe. I'll be honest. This is a pretty far along um, development for a game and for an ecosystem, for a relatively new ecosystem at that. So that's why I'm so bullish on Jupiter, and I can't help but love it and love Solana. But I mean, at the moment, these guys are screaming for the SEC to come after them, especially if they're getting public with lawsuits. So, it's a great coin, but have a few puts on it. I don't know what else to say. Avalanche, I think, is the most neutral and trustworthy one. Trader Joe, you can do all these other fun things that are just as practical. You don't necessarily have to go play a video game and kill aliens for crypto. You can just do a carry trade and make money from crypto that way. So, and I don't think Avalanche is going to get hit by the SEC. They're doing things that the SEC could come after them for, just like they did with Coinbase, with staking and yield farming. The SEC was claiming that Coinbase was pushing out security products with their staking. They could do something like this with Avalanche, but I don't think it's on the top of their radar. And by the time it's going to be, I think Avalanche and the crypto world will figure all this out. Another application on Jupiter. The more we dig into this, the more we find it's just a never-ending rabbit hole. But each thing you find is really cool and unique in its own way. And so here we have the closest thing to a staking program that Jupiter offers, that Jupiter directly offers. And this is a little bit unique. It's kind of a crossbreed between the other type of staking that we have gone over in the past, but this is slightly different. So Jupiter does have a perpetual swap platform. I'm testing it out. We are playing with it right now here at Nova. We're just very small amounts. We're just testing it out, seeing how it flows. Seems to be a pretty good system so far. We're a few dollars in profit. Nothing too crazy, but that's not the point. The point is that they have a perpetual swap system here on Jupiter, which is pretty cool. And you can do Ethereum, wrapped Bitcoin, or Solana perpetual swaps. In my opinion, this is the most useful for Solana because there are 1,001 other perpetual swaps out there that do Bitcoin and Ethereum. And at least over here at Nova, we're going to be doing Bitcoin and Ethereum hedging on the official futures contracts with a registered FCM StoneX. But Solana is unavailable to regular TradFi markets. So I will be using this as a Solana market, and who knows, maybe they'll even have Jupiter itself as a perpetual swap. But the point of the swaps here, not only to hedge your DeFi land holdings, which would have come in handy for a few days ago, good job me, but over here, the liquidity side, the thing that runs this whole swap market, of course, it's decentralized. This is not a centralized thing. This is decentralized, which means that everybody and their mother has to fork up a little bit of cash in order to provide the liquidity in this system. And you can inject your own just liquidity, not even participating in the system and putting down margin, but you can inject your own full liquidity into the system and reap back rewards. Well, what type of rewards? Well, look at my screen. The JLP token. The JLP token is the Jupiter Liquidity Pool token. That's actually what it stands for. The Jupiter Liquidity Pool token, JLP. Not JLP Labs, like Jet Propulsion Laboratory at NASA. I'm talking about the JLP, the Jupiter Liquidity Pool token. And what this thing does is you swap your Jupiter or your Solana for JLP. It's its own coin. JLP is its own coin. And you would buy and sell it in here. You would stake it into the pool, into the liquidity pool. And you get as of right now, a 225% APY on this. Pretty darn cool. You're not going to get an APY that high unless you go back to Trader Joe, but those are temporary. This actually has some real utility. This is the liquidity that comes from the perpetual swap. 70% of all the fees of all the traders, myself included, on the Jupiter perpetual swaps will come back in around for this pool, and that is what's generating the 225% APY. Real utility, real usage, really cool stuff. check it out. New other cool application on Jupiter. Similar to Trader Joe's lending and borrowing program, you have something very similar to this on Jupiter, but it is called Sharky, and it is specifically for NFTs. Okay, it's not just for coins. It is made to put your NFT as collateral and then borrow crypto coins off of that. And I think that's a very useful application. Honestly, it might be even more useful than staking and collateralizing your coins. I've done these lending programs on the blockchain, but I've done it through coins. And as much as that works just fine, especially if you get 80% of your liquidity back and you're making some interest, like we said in the other video, there is a carry trade on the Avalanche network in terms of borrowing money. I mean, that's really never heard of, and it's an opportunity you absolutely have to take advantage of. But this is NFTs, and the reason I find that almost more important is because you can't really do much with NFTs other than use them as collateral or as as something as part of a greater system. Use it as leverage, as something. You can't necessarily turn it to other coins and use them as fungible tokens. NFTs are unique pieces of art, collector's items, and they have unique value and utility to them. So it makes a lot more sense, because they are slightly less liquid and they are all unique, to put them up on collateral and to borrow value against them. That makes the most sense, other than regular just crypto coins, because you usually have to use them for whatever purpose you're using them for. So you can do this here on Sharky. There's not really much to it. It's pretty straightforward. You put in your NFTs on the lend side. You get your offers on the other page. Then you go to the borrow side. You can borrow coins, and you can take a loan out, and then your loans will actually be represented on that page. Connect your wallet, and that's about it, folks. It's not really that complicated. There isn't really too much more to say. You can see all the active loans that have been taken and the prices of which, if you highlight each one. So you can see this is a relatively active market. There's a few 4-hour gaps, but then a few minutes ago, there were some trades. So the market's there. And, I wouldn't use this. Don't try to trade this market or find arbitrage. I would really just use this opportunity to put some NFTs that you have to work and throw that liquidity on some pretty discounted prices. We're going to wrap up this whole Jupiter talk with, of course, a little bit of analysis on the price and the token itself, right? That's why we're all here, to make a little money on these shits we call crypto. So Jupiter is a really new coin. It came out like 3 months ago, not even, in late January. And it sold off in the beginning, settled around 55 cents, as we've talked about. I got in at that price. We had our first real serious rally. It went up about 2x to 150, 160, 170. It topped at, as you can see here on this chart. And for the last few weeks, it's been selling off pretty hard with the rest of the market. Again, the market needed to sell off. Historically, Bitcoin does sell off and get volatile closer and closer to the halving, and even immediately after the halving. It is part of the price dynamics, and it takes wind out of the sails that usually builds up before the halving. Obviously, this year, that is no exception to the rule. In fact, it is an exaggerated version of the rule. We hit all-time highs. So Bitcoin's losing steam. All the capital's getting sucked out of other respective altcoins. Jupiter is no difference. Great. Well, we're going to keep this in because this is a good recording. I'm popular. So Jupiter's falling with the Solana ecosystem. Jupiter had a pretty hard hit. Look, you go from 170 to 90 cents. That's pretty tough. That's almost 50%. But I do think the bleeding is going to stop from here. As you can see, this gap here, it's quite literally, it's called a gap. And this is found in TradFi a lot. This is simply covering the gap in the price mechanics. So the fact that we are starting to cover the gap here tells me that we're probably going to be settling in the sub $1, between this price and 80 cents is going to be where Jupiter is going to be settling until we get ready for the next run up. And as you can see earlier in the price cycle, she does slump and she does need to gather momentum. So we're probably going to slump and bottom between this $1.80 range. I would pile up there Again, I don't see anything wrong with what Jupiter's doing, although they might be making themselves a target for the SEC. It doesn't exactly mean that the SEC is coming after them anytime soon. So right now, the sky's clear. Buy up on Jupiter between $1.80. Really great time to get in. Use these fun applications all throughout the ecosystem. And till next time.